seems like those, just like you and the way I've gotten into our industry, the equipment leasing industry, typically it's an industry that doesn't bring people right in out of college because you typically have had to had some other experience in the business, whether it's lending, whether it's selling equipment. But, it takes a certain maturity level to realize, you know what, it's a bigger, broader world out there than just focusing on one particular widget that I sell or one particular type of funding that I particularly do, and I open a wider world to an equipment leasing industry. What advice can you give to younger people in the industry or not in the industry to look at the industry as a career, and why would they want to get into this business, if they were in adjunct type businesses?
Well, I think your observation is 100% correct, and part of the history behind that is because you needed a certain level of financial sophistication in order to be successful in the business. People right out of college typically didn't have that, and the way they would get it is they would be introduced into the business through the pricing mechanism, because there you understood how the numbers worked, and as you gained more comfort with how the numbers worked, then you might go out in calls with one of the originators or one of the syndicators and gradually develop that level of sophistication and move up from there. People coming into this industry today, I think, have to be very wary of what the financial and regulatory landscape is going to look like, because at least in the short run, it's going to be pretty straightforward blocking and tackling. It's going to look a lot like a lending business and a lot less like a leasing business. And so if you think that's an attractive route to follow, then leasing's right for you. But if you wanted to get into the more esoteric, high-end side of this business where the real creativity used to be, I'm not sure what that landscape's going to look like.
Okay, fair enough. What are a couple industry leaders in our industry that you admire, and why? Either currently or maybe of the past.
Yeah, no, I think that certainly the people that were the prior board chairman, when I came in, Tom Wainert, Joe Lane, Rick Wolford, these were guys who really understood the business, knew how to drive the business. Gary Wendt would have been another one that fit into that category. Bill Montgomery. These were the fundamental pioneers of this business that really rode the thing up from pretty close to ground floor on up. It's been an interesting evolution because that talent has gone elsewhere now. So like I say, I think that if something came back, it's going to be a whole new breed of folks who understand that new business when it's defined somewhere out in time. That'll be reinvigorating this business to what it used to be back in the 70s and 80s.
Okay. Any universal truths that you kind of always lived your life by, or from a business standpoint, or served you well over a period of time? Again, advice to people who are going to be listening to this, now and in the future.
Sure. Don't get cute. Tell the truth. Be straight up. If you don't know, say you don't know. And I'll tell you a little anecdotal story. I had a fellow working for me one time back in the Tiger days who decided that it would be interesting to BS the lessee. So this guy was a very experienced lessee, and he asked this fellow a question. The fellow didn't have the answer to the question, but he thought he would just BS it, just wing it. Well, the lessee continued to probe and ask ever more complicated, in-depth technical questions about the issue we were talking about, which, of course, this fellow could see he was being perp walked right down the street. So the golden rule is, if you don't know, say you don't know, and always tell the truth. Deal fairly with people, and you will have a wonderful reputation in this business.
You know, I don't know.
Or in any business, for that. I mean, it's a universal truth, to your point.
Yeah, I would tend to agree. And, you know, if somebody asked me, you know, if I had the same kind of a question posed to me, Dennis, about when do you start enjoying what you do in the business day to day? And it wasn't until a point that I got comfortable, and maybe you mentioned it before, you need a little bit more maturity, where I viewed talking to customers as something fun. I wanted to have fun doing it, so, you know, maybe it was a little bit more whimsical in the conversations, but, you know, nobody wants a straight-laced conversation all the darn time. And it wasn't until you started enjoying the person and getting to know the person and what makes that person tick. Any comment on that?
Yeah, I think that at least in our business, and it's probably the same way in other segments, we were a narrow community. There was probably, call it 50 syndicators in the early days that did this stuff. And we would talk to, you know, a wide variety of banks. But
it's 12 o'clock.
It became a community. I mean, if you didn't have the personality and you couldn't fit in with that community, you would just sooner or later get cut out, because a lessee, or lessor rather, has a wide variety of people he can work with. And he either wants to work with you because he enjoys it, appreciates you as a person, or he'll go to the guy who he does. You know, the returns are so finite in the differences. You know, we're talking about 3 places to the right of the decimals where the deal gets won. And so whether he gets, you know, an 8.576 return or an 8.575 return is almost immaterial. He's more likely to do the deal with you because of you rather than because of the 1 trillionth of a point one way or the other. So it's very important.
That's fantastic. That's absolutely fantastic advice, I think, and I agree with you 100%. What would you say to those who say, well, you know, we're moving in the internet age, you know, we've been in it, we moved to email, we've come up with other devices where you can go and shop your rate online, you can shop your transaction online and put it out to bid to the lowest bidder, yada yada yada. And basically the relationship between buyer and seller is disintermediated. What would you say to that? Does that going forward?
I would say that it didn't work. We tried it. There was a lease exchange created that attempted to do that very thing.
I remember.
And the fact of the matter is that at the end of the day, when you're talking about, you know, a stack of documents that's maybe a foot tall around these transactions, they're too complicated to have a trading pit form independently. First of all, a CFO, a treasurer, whoever is responsible on the lessee side, is not going to be accepting the responsibility for choosing the lessor. That's why he hired the broker. So when Cargill or ConAgra or somebody says to their board of directors, we're about to engage in a $20 million deal, and they're going to say, the board's going to say to the treasurer, well, how do you know you got the best deal? Well, because we hired this broker who is in the market every day and knows what today's terms and conditions are amongst the lessor community, and he selected the optimal lessor to fill this bill. It was somebody, the broker played the guy who was the scapegoat if anything went wrong. And he cleared the market. So with these transactions, as complicated as some of them are, there's no trading pit that can form for this sort of thing. It's too much required. Too much of it is centered on the handshake and looking in the guy's eye and saying, I know you're not going to do something that's going to hurt me. And I know further that you will close. I mean, part of our success has been we've developed over the years a very high reliability factor. So we may not have the best rate, but we will close. And from the broker's standpoint, he knows he's got a done deal if we're the lessor. Because we'll figure out whatever the problem is, we'll figure out the solution.
Got it.
And that goes a long way toward pushing the success.
Got it. Well, Dennis, we're kind of coming to the end, and this is kind of the end of the formal part of the interview. And I wanted to really thank you for the generous time you've spent and the interest in the interview and the project of bringing pioneers and getting pioneers to archive their story, their commentary, their advice to the future generation of our industry. And I can't thank you enough for that.
Well, Bob, with the risk of blowing smoke up your skirt, I'll tell you that this is really going to be a valuable tool. It's a tremendous archive, and I think it's going to be wonderful to have at the Equipment Leasing and Finance Association as a referral tool for people who want to understand how this business evolved.
I thank you for that comment. And I do think that is the reason why I started it, and frankly, I'm having more fun at doing it than I thought I would.
I'll bet you are.
So
this is a great project.
Thank you. Bullish or bearish on the economy in the next year or two?
To be honest with you, I'm cautiously optimistic. I think the worm is about to turn, and you know, we may be getting a lot more activity in this business than we have in the prior 2 or 3 years, because it's overdue, and there's an awful lot of infrastructure that needs replacement. That's going to end up with leasing somehow, some way. So I think we're on the cusp of some good times.
Well, I you know, about 6 months ago, somebody asked me, you know, the same thing in our, I think it was at the LFA convention, actually, before that even. What do you think? And you start seeing the positive indicators coming out of some of the surveys that we were doing and the LFA was conducting. And I said, you know, I'm not buying it yet. But then at the LFA convention, and I don't know if you noticed this or not, but just talking to people, it was much more upbeat.
Yeah.
The data wasn't there. The deals weren't actually on the table yet, but you could tell there was activity. I think now, going back 2 more months into the future from the October timeframe, I'm feeling more confident as well. So I think the audience has heard it here on January 8th, 2011. Dennis Neumann says, get in the market, pull your money out of the mattresses, go dig up the coffee cans in the backyard, and invest.
Get ready. That's right. We're on the verge. Not yet, but get ready.
Get ready. Got it. Dennis, thank you so much.